Bitcoin catches a cold, Coinbase catches a fever, but let's talk about the business, what's really going to drive this thing in the long term. Welcome to the Drill Down Earnings. We've got the latest fourth quarter results from Coinbase. I'm Cory Johnson, the Chief Market Strategist from Futurum Group. We've got the business story behind the stock on the move, and this stock is on the move. Coinbase results a lot more interesting than you might expect. Wall Street says, oh, Bitcoin, that's Coinbase. It says a beat or a miss. It's a lot more than that. Is it a beat? Sure, it's a beat. It's a big beat. We're going to dig into the business beyond the miss or the beat. Sales for this company, $954 million in the quarter, 15% better than Wall Street expected, 52% better than last year. That's great. But and turning a profit, $2 million profit on almost $1 billion in revenues, that's not so great. But look, that's something. But we're going to do things a little bit differently. Let's look at the stock chart first. When you look at the chart, what you see from this company is you see after the Bitcoin ETF was announced at the end of the year, stock sold off coming into these results. And after these results, the stock goes right back up. And if you compare it to Bitcoin prices, Bitcoin goes down, Coinbase goes down. Bitcoin goes up, Coinbase goes up. It's more extreme. Bitcoin catches a cold, Coinbase catches a fever. But let's talk about the business, what's really going to drive this thing in the long term. If you dig deeper beyond the headline numbers, you start to see that 19% of the revenues in the last quarter was not from the trading of crypto. It was from the stablecoin business. People parking their money in USDC, the US dollar coin issued by Circle through a relationship with Coinbase. Really interesting. It was about the interest on the deposits at USDC on those dollar coins. Coinbase is very, I did what Wall Street does. Coinbase is very reliant on a swing in interest rates. Coinbase does something great. They file their 10K just as they release results. It's the best practice. Not many companies do that. Coinbase, very honest and very transparent in doing that. But if you read into the results, if you read what the actual 10K said, in their 10K, they say the issuer of USDC reported that reserves held in cash, safe stuff, short duration US Treasuries, overnight US Treasuries. So the balances might not change if interest rates change. But the related amount of stablecoin revenue for Coinbase that they earn could be significantly impacted by the increase or decrease in interest rates. A hypothetical 500 basis point increase or decrease in interest rates applied to USDC reserves would have been a $735.5 million swing in their annual results. So interest rates driving things, stable coins driving things, not the usage of Bitcoin or crypto, but indeed it is that usage of Bitcoin and crypto that Brian Armstrong, the terrific CEO of Coinbase, talked about in their earnings conference call, specifically as it relates to payments. Take a listen.
Payments is one of the areas that we're exploring in 2024 around utility. And I'm pretty excited about that as an opportunity. I mentioned in the opening comments that last year we did announce that you can send USD coin on Base and instantly anywhere in the world for free. So the cost and the transaction fees and the confirmation times are really starting to come down. And the more you reduce friction, the more payments you'll start to see. And so there's a variety of different use cases for payments. You know, payments is a huge industry. Some of this you can look at in emerging markets where people have local currencies where there's high inflation. And so, you know, the dollar has a great brand there. People want access to the dollar. So they're able to do that now with stable coins, and USD coin kind of gives them a trusted option that's, regulated. And the partner we have with Circle, they've been a great partner. They're a great issuer of that. So emerging markets, demand for the dollars as an inflation hedge, I think is a starting point.
So payments, maybe the future and the first giant use case for crypto. I've been saying that for years. Brian Armstrong. Come on in, the water's warm. All right, the big drill down earnings takeaway that really summarizes these really interesting results from Coinbase. And one number that tells us a whole lot, a really interesting one about Coinbase right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, we've got a quick drill down earnings takeaway of Coinbase results from the fourth quarter. Really important quarter for this company because they had over $900 million in revenues. That's good. They had a $2 million profit. That's okay. They had fantastic results from their stablecoin business, which was 19% of revenues, which really benefited from a rise in interest rates. That might not always be there for them, but it was here this quarter, it was here this year, and that was good for Coinbase. I want to give you one number that means a whole lot, the drill down earnings bite. 45%, that's the number. Coinbase cut their costs by 45% on a year-over-year basis. They cut their headcount, they cut their spending on R&D, and all those cuts led to a profit for Coinbase for the first time and maybe puts them in a better position going forward. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. We've got quick earnings takes on Instagram and on TikTok. We've got a more robust earnings take on YouTube. Hope you enjoy that. Check me out at CoryTV. Drill Down, a production of 6.5 Media.